Welcome back to another week in review. We're looking at the trading week of March 17th. Just to preface this week, it is quarterly OPEX. It is roll week for futures contracts. Generally, these weeks I don't trade a ton. I try and limit. I'm a fairly limited trader as it is on an intraday basis, but these weeks when we have a lot of mud around the volume, around the delta. It makes things, at least for me, a lot less clear as far as what the intraday rotations really are looking for. So I try and limit trades on weeks like this. We also have FOMC this week as well, midweek, which complicates things as well. So just things to be aware of. So just to start out with some data like we normally do. Monday, we don't have much. Monday at 8:30 a.m., we have retail sales as well as the manufacturing index. I don't expect too much of a reaction off of that, especially considering FOMC. Tuesday, we have housing starts at 8:30 and the 20-year bond auction at 1 p.m., which actually isn't listed on the Forex Factory calendar, but just take note, 1 p.m. bond auction is going to be there. Wednesday morning, to be scheduled, we have a BOJ press conference, so if you're trading pre-market or earlier in the session, then I would just be aware that that time is to be decided. But there is going to be a press conference and probably some guidance around rates, inflation expectations, et cetera, et cetera. So could be impactful in the morning session. And then obviously Wednesday, the big thing will be the FOMC rate decision, as well as the presser that happens at 2:30 p.m. So be aware of that. Obviously, that's going to be pretty impactful in the market. I don't really expect anything dramatic to happen around that. Market expectations have been basically spot on. So unless there's some sort of, out of left field change or some comments made by Powell that are, not really expected by the market, I wouldn't really expect FOMC this week to really move the tape that much. Again, unless Powell comes out and says some things that are basically net new that we're not aware of. So we'll see. Obviously, it's a huge data point. Just be really careful around 2 p.m. on Wednesday. It's the only thing you can do. I'm almost never positioned going into FOMC, so just take that as a note there. Thursday, we don't really have much on Thursday. We have jobless claims at 8:30, and then 9 a.m. Friday, we have Williams speaking from the Fed. Again, not much on Friday really to worry about. It's really going to be Wednesday, and then obviously the muddied water with contract roll. So normally when I plot the expected moves for ES or for the S&P, I'm looking at the ATM straddle on Friday. So I had a couple people ask me the question of, how are you plotting the expected move? The expected move is based on the at the money straddle for the following week from Friday's settlement. So just to use this, I've already plotted it. So we have about 120 to 130 points of range priced in for next week, which is about plus minus 2%. So obviously fairly wide. I guess considering the move that we've had from the highs here, it doesn't seem like it's that wide, but from a statistics perspective, it is quite wide. So expected range highs are around 5,800 on the S&P. And the expected range low is around 5509, or basically last week's low. So I'm going to be referring mostly to the cash index just because of the roll week this week when I'm looking for the expected move, or I'm looking in reference to the expected move. I did plot it on the futures chart that you'll see, but the chart for me will roll and futures will roll on Tuesday when volume at settlement is higher on the new contract, which generally is Tuesday. So for simplicity, on roll weeks, Monday, I generally trade the current or expiring contract, which would be H contract, going into Monday. And then everything will roll over on Tuesday for me. Some people go straight on Monday to trading the new contract. That's fine. Just personal preference for me, and the way that I plotted my charts is that it changes when volume at settlement changes, and that's just how I've always done it. So that's just what I stick to. So do whatever you want there, but that's just how I'll do it. As far as Monday, so I'm going to be referring to specifically for Monday, and some of these numbers that I'm talking about today are specifically in reference to H contract. There's about a 53 point spread between H and M contract on ES at least. So keep that in mind, especially once everything starts rolling over. I don't back adjust my charts. Some people do. Again, personal preference. I don't. I like to see where contract roll gaps are. New contract will trade to old contract, and those roll gaps actually do matter, in my opinion. And just from looking back and back testing, like they do matter to me. So that's why I don't back adjust personally. But again, a lot of people back adjust. A lot of people are super successful doing it that way. That's totally fine. So to get into last week very quickly. So continuation of a sell on Monday, and then we basically shifted to short-term balance the remainder of the week. So we had that continuation Monday early, and then we consolidated basically the remainder of the week, setting the low of the week on Thursday, and closing at a full 10% correction on Thursday. So what happened Thursday to Friday was important for Friday trading, but I think it's also important for next week as well. So basically, what I'm looking at is Tuesday to Thursday. Tuesday shifted us to short-term balance. So basically, continuation of a sell Monday, and then from the prior week, and then shifting to short-term balance the remainder of the week. What happened right here on Thursday was essentially a look below and fail of this short-term 2-day balance range. So 2-day balance lows at the time were 55.34s. What happened on Thursday was we closed below it, but then Globex quickly reclaimed it and basically didn't look back, and it turned into a trend day higher. So balance rules generally dictate that failure at one end of balance targets reversion to the midpoint of that balance and then the opposite extreme of that balance. And that's what we got almost perfectly, actually. So the 2-day balance range that we had from Tuesday, Wednesday was 55.33s or 34s to regular trading data, 56.45s. So this was the data spike. This is ETH. So this is not considered, strictly speaking, this is not considered part of the balance range. You're looking at the regular trading hours high, which was 56.44 or 45, whatever you want to call it. So we looked below it on Thursday, closed below it actually. Settlement was just above, and then Globex continued to target the midpoint of that balance, which was around 55.90s, which was hit. And then we moved to the opposite extreme and actually touched it almost exactly at 56.49s for the day. So balance rules in effect there were very effective. That's how I traded Friday. I took some trades from a 55.70s for some points inside IB. And then I took one trade later in the day on the afternoon pullback to get some of this move up. I didn't hold for this entire thing. I was done before we actually hit the top of balance, but turned into a really nice day after what was a very messy week. The big thing for me Monday is going to be whether or not we see continuation buying from what we had on Friday. So I think the easiest way to look at this day, or look at Monday, if you're trading H contract, which I will be, is two areas of interest. We have the set of single prints that broke us away. We have a P-shaped profile, basically a double distribution profile, separated by a set of single prints here. So we're looking at 56.10 to 56.08. If we have early attempts to sell below 56.08s that are met on the bid, this is also last week's VWAP. If we have early attempts to sell below 56.08s and those are met on the bid, and we see responsive buying step in, I want to be on the long side of that trade, looking for the rotation back up into these balance highs and last week's upper value range up into 56.40s. The other way we could look at this too is that we do have a spike away from M period, which is also last week's value area high, and it's also basically the top of balance. So if we see immediate buying continuation, what I want to see in the regular trading open is buyers be able to get above 56.40, let's call it. It's 56.39 as a spike base, but I want to see them get above 56.40 and hold to break outside this 4-day balance range to come and test 56.70s, 56.88s, and then ultimately 57.20s. So the long trade setups for me will be either inability to sell back through 56.06, and then we see the rotation back up, or we see a clean breakaway from 5640s that get us to 5670s to 5688s, and the upper range would be 5720s. On the flip side, the short trade that I'd be looking for would be if buyers basically drop the ball up into balance highs. So if we see a lot of volume, a big impulse that gets put away to try and break us away from 56.48s to these balance highs, this 40 to 48 range. If we see a big amount of volume, a big impulse that goes nowhere, and then we see it get sold back down, back below 56.40s, then I think to me that we'd be looking potentially to look above and fail of short-term balance, which again could target reversion back down to the middle of that balance range, potentially the opposite extreme. So the thing I'd really want to see there is a lot of volume with not a lot of results. So you'd really want to see a lot of buying pressure. You want to see a lot of positive delta get jammed up in there, a lot of volume, and then you want to see it sold back down and then no continuation, no ability to continue back above. To me, that would be a decent sign that we're going to see reversion. And then I'd be looking back, basically through rotation back down into 5600s, and then the bottom of Friday's value at 5586s and potentially down into 60s. Obviously, if that gets really slippery, then we could test the opposite extreme of that balance that we're failing, which would be down here in 55.09. So as far as bias, I really don't have much. When we have short-term daily balance like this, it's easiest to play the extremes. Finding areas like this, this LVN here, which is also these single prints, can also help you manage, whether or not the market is, strong or weak in the short term. The other potential short trade is that if we see, Monday open just nuke straight through 5608s, then to me, again, that's a pretty good sign that, the likelihood of buyers maintaining this upward momentum is probably shot for a little while, and we'll probably be looking for, a short trade to get us back down into the bottom of Friday's range right there. So I'm mostly focusing on the S&P 500 on the ES, just because it's simple, as well as the ranges have been so good on ES that, my interest in the NASDAQ has been fairly minimal and continues to be fairly minimal. The biggest things I think I'm looking for on NASDAQ is that if we are putting in a short-term bottom for a relief move higher, whether or not that turns into a lower high that gets sold back down where sellers reload, or whether or not we see us break back up back into the top parts of range and weekly range. And then we see, we have some headline that comes out that the market loves, and then we rocket from there. I don't really know. I don't really know what that move's going to look like, but at least from a short-term basis here, NASDAQ's also in the middle of balance. So basically looking at it the exact same way, I highly doubt I'm going to be trading NASDAQ this week. But with that being said, the setups I'd be looking for would be a clean breakaway from 19700s. So this 19700 to 19765 area, this is the prior weekly low that we broke down from, and also the top of current balance highs. Again, I'd really want to see a clean impulse away from this as a buyer that sticks, and then I'd be looking for basically a move back up to 19900s to 20K on the H contract. A same exact trade, basically. If we start failing, if we see a lot of volume, if we see a lot of buying that goes absolutely nowhere and gets stuffed back down up into these balance highs, again, I think it's the reversion trade back down, and we have the weekly POC down in the bottom of this range, down at 450s, which I think would be very likely to tag. So I'm going to keep that really simple. I'm going to keep this pretty quick. I don't have much else to add. Hopefully this helps. Roll weeks are always tough, especially when we start talking about the spread, and then obviously there's going to be a contract roll gap. So these levels are applicable going forward for sure. But I would just be conscious that basically Tuesday onward you're going to be dealing with about a 50-point spread gap, and then just basically manage around that. If you back adjust your charts, then you won't have that gap, and you can use these. You can use the same general framework of what I'm talking about here on a back adjusted chart. The levels and the numbers will just be different, but the concept is the same of market and short-term balance, breaking out of balance or failing to break out of that short-term balance and reverting and targeting the other side. So hopefully that helps. Thanks.